Looking at what has happened over the years, we have seen the rise of the temporary worker. People have been unable to get full-time work since the financial crisis as a result of economic woes, as well as compounded regulations, making it burdensome to have full-time employees. Then, factoring in the shift to online purchases. Add the icing on the cake with increased automation and robots, and you have an inevitable crisis on your hands. You came here for the truth, so let me unveil that for you. Today we are going to talk about the massive store closures that are going on today. I want to begin with this. Empty space in regional shopping malls reached a 6-year high in the first quarter, adding further stress to regions being hit by a retail earthquake that is shaking up the job market across the US. This has been going on, and I've been covering it here on the channel, and I will continue to do so as time progresses. The vacancy rate in big US malls increased to 8.4% in the first quarter of 2018, up from 8.3% previously. All right, now they surveyed different areas around looking at this. The neighborhood and community shopping centers in 41 of the 77 areas experienced an increase in vacancy during the 12 months ending March 31st. All right. And they're suggesting here that because shoppers are using online purchases, this has been affecting the brick and mortar locations. To some degree, this is true. But if you hang on for a moment, I'm going to show you the proof that this is only a very, very small piece of the puzzle. Okay, so let's get into some charts today and really outline what is going on. Summary of US store closures and openings in 2017. You can see that grocery has a massive increase here. 1,785. Lots of stores opening. You also have to remember some close, some open. So in the case of, for example, hardlines, you can see that although there's a lot of closings, there are some openings as well. So remember to factor that in. But what I wanted to note was that grocery includes dollar stores. That's the major portion of this increase. And I will show you that in just a moment. But I want to look at this right now. Year to date, 2018 major US store closure announcements. Walgreens closing 600, and several different types of retailers, oftentimes department stores. But you'll see this announcement of nearly 1,500 stores to be closed. And that's in addition to everything that has gone on in the years prior. Year to date 2018 major US store opening announcements. Look at this. Dollar General is really the only significant corporation here. 900 stores, and the next largest is Gap and Walmart, each having 90, which is fairly insignificant. So it is the dollar stores that are opening up, and that shows you that people need to look for more deals. They need to get the cheapest stuff available. They don't have that expendable income. They're unable to buy more expensive goods. That's the average population, that is. So they're going for the cheap stuff. They're going to the dollar store. All right? Nothing wrong with that. But that's a fact. That in the previous crisis, you can see it for yourself, that at the very end of the bull market, we had companies like Walmart, we had Costco and others that were increasing at the very, very end just for a short period of time. As other retailers were declining, people were dumping their money into these because they were saying that people need to find discounts, they need to buy in bulk, they need to be able to, get a little bit more out of their money. And so these were rising. The same thing is happening today. 2017 major US store closures. Look around. Radio Shack dropping down 1,500 stores there, Payless 700, and so many more. All different types of companies here. A lot of them tend to be in different clothing or different types of retailers like this. Of course, the department stores and other locations, they take up so much space. So you need to have a lot of people coming through your doors in order to have those, make up for all that rent, make up for the employees you need to keep the lights on and everything else. But you can see 7,000 stores closing in 2017. Companies have one thing to worry about, and that's their bottom line. They have to have corporate profits increasing all the time. And if they don't, they start to shed employees. And if that doesn't work, they start to run into a little issue, and that's closing up stores entirely. So this is what's occurring today. Many people have been losing their jobs, and unfortunately, in the case of Sears, there are pensions that are not going to be paid out to people. That's an issue that is really going unnoticed. With all of these people losing jobs, they have bills to pay, they have families to feed. What do? Well, they get any job that they simply can find. And a lot of times today, that's temporary work. So you'll find that people, they are added to the job market and they fall off month after month after month. It's the same cycle that repeats. The same people are getting hired every month, every 3 months. They have seasonal work and they have temporary work. These people might want to have temporary work, but a lot of them want full-time. And they can't get it. So statistically, we can look at this and break it all down and understand what's really going on. You have a lot of companies that people have been working at. They're closing up shop. They are changing maybe to online. Maybe they are, just unable to beat the competition. This happens, of course, but the rate at which it's happened is unbelievable, especially at a time we're being told everything is fine and dandy. That's not the case. Well, let me get further into this, okay? Percent of retail real estate loans that are delinquent by metro area. This is as of September 2017. Now this is insane. 27% of retail loans in Pittsburgh are delinquent. That is unbelievable. Think about how many companies are here, how many people work for those companies, how many people own these buildings, how much money is really at stake here, and how much is about to be basically wiped off if there's bankruptcies and everything else. This is potentially going to start a torrent, going to start this whole, snowball rolling down the hill, picking up steam. I won't say too much more about this. I'll move on. Retail jobs lag. Compared to all private jobs, positions at physical stores have grown less over the last 10 years, both in numbers and in wages. Ultimately, there's a lot of talk about jobs being replaced by robots, automation, and of course, going online. And that's something that I really want to cover here in this video, but again, hang in there because I need to show you everything before I get to that. Percent of all jobs that are retail. This tells a lot because many people don't understand how retail jobs, how important they really are. They'll say, whatever, who cares? So what retail jobs you got? That's just a small percentage of the economy. That's a small percentage of the public. Not at all. Look at these areas. When it's really dark, that is up to 45% of the areas. And you'll see that major cities, oftentimes, they are retail jobs in the major cities. That's where most of the population is. And you find that there's that, again, snowball effect that occurs. It's not in all areas, and obviously look around, you'll see which places are more affected than others. But understand that there is a significant percentage of the population in the United States that works in retail. If retail are shutting down, what's going to happen to these individuals? Obviously, not being able to find work, they get temporary work, they don't get the pay they want, they don't get the health care, they don't get what they need, and they will unfortunately be suffering. Don't go anywhere. Click on the link in the description of this video to take you over to part 2. See you there.